All right. Good afternoon, everybody. Thanks for jumping on to what I think is now our fifth segment here of talking about today's market, talking about DLP, investing, keeping you informed of what's going on in the real estate market, what's going on here at DLP. And this will actually be our last segment like this for a couple weeks. As you'll hear more about in a couple minutes, we're going to mix it up. We're going to be meeting again the same time next week, but it's going to be a little bit different format, which you'll hear about. And then 2 weeks from now, hopefully you received the email to our big virtual gala, which we'll be replacing this segment with. So we'll be talking about that in a few. With that said, we kind of always end these meetings with lots of questions, and we've started the habit now of starting them with some of the main questions, which we've realized that people want to get answered. So instead of making you kind of wait for these questions that have been being asked all week, we've been addressing them right at the onset. And then as questions arise as we go through, we'll answer all those at the end. So feel free to jot any questions in the chat box, into social media, and we'll make sure to address those at worst at the end. But a couple questions start off with. This one we hit on actually last week too, but I think it's worth hitting on again, especially since we have a lot of people who weren't on last week. Here at DLP, this is our 14th year in business, and this is not our first time we've experienced an economic market downturn. We were here through the 2007, 8, 9 Great Recession, which I think will still be drastically more significant than what we're going to experience ahead in the world of the housing market, as the fundamentals here of the housing market are still really, really strong, which we'll touch on a little bit. But we've gone through this. We've gone through distress. We've gone through panic. We've gone through lack of confidence, fear, and all the challenges that come from that. This time is, of course, different than any other challenge any of us have experienced in terms of what's driving it and some of the unknowns. But this isn't the first time we've gone through heavy unemployment and a lot of the challenges that come from that. Probably the most common question I feel I'm answering every day, at least 100 times a day, it might be a slight exaggeration, but is about rents. And everybody, has been extremely worried since March on that nobody's gonna be able to pay their rents. Nobody's gonna be able to pay their mortgage payments. And in turn, how in the world is DLP going to be able to make distributions to our investors? So there's been a lot of fear being driven through media, and some of it justifiable. So, we all hear the unemployment stats, right? And so we spent a lot of time heading into April prepping for April payments, both from our borrowers and from our renters or residents. And there's some pretty cool information to report on so far. So I guess actually I thought I had a slide in there on that, but I'll just hit on it here now. So right now, through the 15th of April, we've collected 89% of our rent for the month. So put that in perspective, that's about 2% off pace with where we were the same time last month, the month of March, when we did have the advantage that lots of people had received tax refunds, and March is generally the best month of rent collections, and it was actually our best month in 2 years. We're 2% off that pace. We've collected 89% of the rent due to us, and as probably a lot of you have heard, people are just starting to get their stimulus checks over the last day or two. So we're really expecting that to give us a big boost in collecting a big percentage of the 11% of rent that we have not yet collected. So we're not seeing 30, 40, 50% portfolio wide of people not paying their rent like you might be hearing about in the media. We're at 89% with still half the month to go. So we feel pretty darn good about where we're at there. And then in terms of our interest payments from our borrowers, this has been, pretty interesting. So our borrowers are real estate investors who are buying distressed properties, generally improving them, and then either selling them or renting them. And so while we have a loan against the property for the majority of that time, this is a property that's not producing income. It's under renovation. And we've actually had, other than the borrowers, we had, a small number of borrowers who were in default before coronavirus came. Other than those borrowers who were already in default, all of our borrowers coming into April who were current, every single one of them have made their April payments. So we've collected all of our payments from all of our borrowers who were not already in default, who had nothing to do with coronavirus, for April. So that's pretty astounding. It's pretty amazing and exciting. It really shows the quality of borrowers we're working with. Doesn't mean we're through the clear. Doesn't mean we're not going to have any issues come next month, and doesn't mean people aren't dealing with some challenges. But I think that's a pretty great statement to say. We did no forbearance agreements. We didn't waive any payments. All of our borrowers paid their payments. The vast majority were paid on the first of the month. So pretty exciting for sure as well. So all in all, we're feeling great. All in all, distributions to investors continuing to go out, double-digit returns in our lending fund, our income and growth fund, and expecting to continue to do so, as we'll touch on again in a little bit later. So what will May look like for DLP if this quarantine situation continues? That's a question we get a lot. I think we're all hopeful that, and I hear tonight there's going to be some news on this, but I think we're all hopeful that states will start reopening and a lot of the quarantine will start reducing here come May 1st. Obviously, some states such as New York, which we don't actually do any business in, and California, which we do virtually no business in, may have a little bit slower process of reopening, but we're optimistic a lot of the states in the Southeast and Pennsylvania and New Jersey and all the states we're very active in are going to start reopening here in May. Of course, none of us know that. If this continues through May, I think for the overall economy, it'll have some pretty big effects. Here at DLP, there's definitely argument to be said that May could be more challenging than April if businesses stay closed. But I'm optimistic that there's some things that will play in the favor, including people getting those stimulus checks, including many of these people who've now gone on unemployment who you're hearing about had not yet started collecting this, really incredible unemployment package that we've talked about here in past weeks. The fact that a lot of small businesses are receiving these stimulus loans. You may have heard today in the news that they've actually run out of funds for the stimulus, this small business PPP program, but most expect that they will refund that program to continue to fund small businesses. There's some things that haven't yet happened, haven't yet benefited small businesses and our residents that should make a pretty good impact. So I think if we stay shut down, we're going to see a lot of similar in our world to what we saw in April. There'll be some different positive wins and negative wins that we have to deal with. But I think overall we'll see in the scheme of things some pretty similar results to what we're dealing with right now. Certainly, I think some of the world, such as hospitality, restaurants, if they have to stay closed through May, that could be pretty devastating for a number of those smaller businesses. So hopeful, I think for the economy as a whole, we get reopened here sooner than later, as I'm sure almost all of you will agree with that statement. So when do we expect to get back to business as normal? We've been, operating pretty close to normal. So we're having to deal with things like, having less people, out at our properties we manage, staggering the hours of our team members. So they're not all in the office at the same time. We're definitely dealing with challenges in Pennsylvania that real estate sales and construction are not essential services. Other than, those issues, and then of course, most of our corporate team members are working from home. We were already a company operating on Zoom, already a company very much spread across 20 different states already. So we've operated pretty darn close to normal, other than dealing with, some of the state mandated restrictions that for the most part, we've barely missed a beat. So hopeful we can start reopening our offices fully come May and at least, with social distancing and be able to get closer to normal. So it's a little easier. But in terms of actually getting results and getting things done, we've been operating pretty darn close through all of this. Here's that stat I was talking about. So 89% of our rent collected as of April 15th. So that's pretty awesome. And then 100% of our borrowers have made their April payments who were not already in pre-coronavirus default, which right now in the lending fund, 3% of our borrowers are in default. And many of those are on the verge of workout, but pretty amazing. Hundreds of loans that are not in default. The vast majority of our total over 400 loans, all but a few that were already in default, made their payments here already for April. So pretty awesome. In addition, DLP's capital has stayed open. We've raised more than $12 million in new capital commitments this past week. This week we're in right now alone. So continuing to have the confidence of existing and new investors, investing and allocating, looking at DLP, looking at our funds as a place to get to invest their money and not face volatility and have consistent, safe returns. So that's been very exciting for sure as well. And thank you to a number of you I know are in this meeting right now who are part of that $12 million. So thank you for that confidence and that opportunity. Direct Lending Partners has originated 8 loans this past, so far in April, these past 2 weeks for $2.646 million. That doesn't include today, where we closed another 3 loans today, in addition to 3 lines of credit for $3 million. So we're set to have a strong April. We have a very strong pipeline. I think I approved 6 loans for final approval today for closings in the next couple of days. So we're open, we're doing great. We're breaking records on loan applications and submissions, which we'll talk about. So it's been a great opportunity for lending. Our Bright Homes, our home building business, we've put 14 homes under contract in the past 2 weeks, which is a record. And we're scheduled to have our biggest closing month ever, the most number of closings ever here in April. We're on pace for that. I think we're at 7 or 8 so far, and we have another 12 or 14 closings here over the next 10, 11 days. So I'm going to be a great month there. Barely missed a beat. Have not had transactions falling apart. Have barely had any delays in our transactions and putting new homes under contract for yesterday alone. So been going great, all things considered. And one point to mention there that I don't think isn't as clear enough. So when you think about it, you say, well, how are real estate sales going to happen? There's no doubt that there's going to be less real estate sales. This is going to hurt home sales. And when you look at the market on a macro standpoint, that thinking is 100% accurate. There's no doubt about it that when people are afraid to put their home on the market or can't because they're not allowed to by state regulations, or they're scared or aren't allowed to have people come and tour their home, when home buyers are afraid to come into an occupied home and go out and get in contact with people, all those forms of fear and government restriction, of course, that's going to reduce down the number of showings that happen. That's going to reduce the number of home sales that happen. But when you take it a step further and think about, well, how does that affect us? How does that affect, an investor? How does that affect a home builder? Well, think about this. You're in Bright Homes. So if you're a home buyer in Palm Coast, Florida, and you want to buy a home, which homes do you want to go look at? The vacant, brand new homes that nobody's living in, or occupied homes, right? Not to mention the occupied sellers don't want to let you show your home and aren't putting their homes on the market. So we're getting a disproportionate number of buyers who want to come see our homes, not only because they can come see them without having to come in contact with anybody, because we have self-showing lockboxes, and we're doing virtual tours as well. So we make it very easy to see our homes, partially because they're vacant, partially because of the technology and the infrastructure we've built here at Bright Homes and at DLP. Same thing if you're one of our borrowers and you're flipping a home. Well, if you put that home on the market as a vacant home with nobody living in there, those are the homes that buyers are going to go see for all these same reasons. So every one of the homes that we have renovated, and we've probably put 8 or 9 homes on the market in the last 3 weeks in Pennsylvania, in a state where home sales and tours are essentially nearly impossible to do. Every one of them have had offers, multiple offers. Think about the same thing for one of our real estate investors who want to buy a home, who want to buy distressed homes. Since sellers don't want to let people tour their home, they don't want to have people walking through their home. If they do need to sell, what would they prefer to do? Sell the home to a real estate investor who doesn't need to set up showings, who doesn't need to be walking through their home, and can make it very easy. So for both buying deals and selling renovated or brand new homes, these restrictions have actually given us, a very big disproportionate amount of the business that's being done, which is why you're seeing these kind of stats like I'm showing on the screen here right now. So we're still focused very much on growing our portfolio, growing our investors, which we'll talk about in a moment, what we're doing at the end of this month, growing our and being in position to really capitalize on the volatility and stress that are coming here in the months ahead. We have now over 900 investors invested here with DLP, which is 280 investors more than we had this time last year, meaning we've added 280 new investors in the past year. That excludes all of our existing investors who've invested additional investments with us in the past year. There's 280 new investors who weren't invested with DLP 1 year ago. We will 100% pass 1,000 investors here this year, very likely in the next few months. So far, existing investors have added $26 million to their investments with us for the first 3.5 months of 2020, despite coronavirus, compared to our existing investor base added $13.3 million to their investments with us over the same time in 2019. So nearly our existing investor base has invested nearly twice as much with us the first 3.5 months of this year compared to the first 3.5 months of last year. So that's been pretty exciting. And again, I know many of you are in this meeting. So thank you for that. It's been really, really amazing to see the level of commitment and confidence by our investor base. We've also started partnering with more institutional investors, investment advisors, bringing in firms like wealth advisors, RIAs, pension funds, endowments, which has been really great as well, and helped brought us access to new capital and new forms of growth as well. On the lending side of our business, we are having, as I mentioned a moment ago, the highest application volume in several quarters, and it's actually the highest applications. We broke the highest applications in a week ever, I think twice out of the last 2 or 3 weeks. Even though we've tightened up our loan criteria, even though we're dealing with all the craziness going on in the environment, we're having an incredible amount of new borrowers coming to us, existing borrowers coming to us for all their funding, and an incredible amount of activity by our sales team out using this as an opportunity to touch base with investors, check in with them, and offer, capital, offer a reliable partner who can help them execute and take advantage of some of the great opportunities that are available today and will be even more so available over the months ahead. We're having lots of other lenders come to us as well because their funding sources have dried up. That's been one of the most interesting things. Lenders who frankly have been larger than us over the last number of years coming to us, hopeful we can fund some of their loans because they literally can't fund any of their loans for their borrowers. So we've had unbelievable, some of the largest lenders in this space coming to us saying if we could fund their borrowers. And as much as we would like to help them, we really have not done so because we've been focusing our capital on servicing our borrowers and new relationships and using this as an opportunity to grow our relationships, which is what we really focus on. But it's been amazing to see the amount of other lenders out there with no source of capital and having an inability to close loans in this environment. And a big part of our ability to execute and our ability to grow through all this is the vertical integration. As most of you know here, if you've been on one of these webinars or certainly invested with us, you're aware of our vertical integration, the fact that we do all the property management, asset management, construction, real estate sales, all the direct origination, working with our borrowers, all the integration of executing on our strategies and managing our returns, collecting our rent, collecting our payments. We do all of our loan servicing, everything in-house, which is why our results are probably a bit different than what you're hearing from others and what you're hearing in general media through these last 4 or 5 weeks now. In Bright Homes, we're continuing to build. Florida's taken as most states have, a very pro-business approach to construction, determining it to be an essential service. We have nearly 200 homes under construction. We're at more homes under construction today than at any point, more homes under contract today than at any point. And we're building homes both for sale and for rent, which is going to become even more valuable in this environment. If financial markets tighten and it's harder to buy a home, well, we rent them, we do lease purchases, and we do sales. And then we've also been focusing here at DLP, despite all of this, one of the biggest things that I'm excited about through all the shakeout of coronavirus is that there's going to be a lot of talent who's been laid off, who are working at companies who are unfortunately going to go out of business. So it's going to be an amazing opportunity to bring in talent at all levels of the organization. We've been seeing a tremendous amount of that. That's been one of the biggest areas of time I've been spending is having really quality people reaching out to us, looking for opportunities, feeling out, how we're doing because they're looking for a new place to go as the company they're at is faltering right now. And we brought in some amazing leaders, which I'll talk about here in a moment. We focus a tremendous amount on leadership here at DLP. In fact, I ran 2 hours essentially of leadership training this morning. And we've defined leadership here at DLP as leadership is defined by results. Leadership is the capacity to influence others through inspiration and passion, generated by vision, ignited by a purpose, and produced by conviction. And that first sentence is really important. Their leadership is defined by results. And at a time like this, that's never been more true. John Maxwell, who's the forefather of leadership, and if you at all interested in leadership, if you have not read the 5 Levels of Leadership, go buy it now, download it on Audible or however you read or listen to books. It's an incredible book. And John Maxwell says leadership is influence. And that's a very simple and concise and accurate way to define leadership as well. We also have defined at DLP the job of a leader, and leaders make things easy so the team can execute. Is the short story to the job of a leader. And that's what we've been expecting our leaders to do in this crazy environment, is to step up, make things easy, show the way through the forest so that our teams can execute, being able to simplify, the complex, and things have been complicated and confusing through all the noise that's going on around us. As you can imagine, think about our service team members, our maintenance team members, out in the field handling service requests, and our managers and leasing team out there, renting apartments and talking to clients and dealing with them, to, people in construction, hearing that, construction's shut down and still out there performing, to, our real estate salespeople having to figure out, how do I sell homes when the governor says home sales aren't allowed, right? I mean, you name it. It's been a crazy environment, but our leaders have stepped up and helped our teams continue to execute and drive results. And speaking of leaders, we've brought a few new leaders into the organization. We have actually a few already also hired that have not yet started. We'll be starting soon, that I'm really excited about. These 3 leaders have started here in the past about month. We have Corey Donahue, who's our president of DLP Realty. Started with us about a month ago. Been diving deep in and helping us drive results, all over DLP, including DLP Realty, Bright Homes, Alliance, title company, really driving and bringing tremendous background and value. And we'll talk more about him probably in all 3 of these gentlemen, our team members, Shayna, Scott, and Corey, next week when we talk about what our event is next week. Shayna, who's our new VP of Property Management Operations, just started this past Monday, working directly with Melanie, our president of property management, to drive results as we continue to grow our portfolio and execute through these challenging times. And then Scott Jones, our first ever SVP of technology, helping us utilize technology to drive efficiency, to execute, and needing that focus in this time of having to operate virtually and having to, do home sales and leasing and, so many things in a virtual manner they never had to do before. It's going to be a really, really valuable for us, and also started just this past Monday as well. So really excited to bring them aboard and help us strengthen our leadership and drive results here at DLP. One of the things we talk a lot about here at DLP is our mantra, which is leaders made here. And our strong belief that leaders develop leaders. And that's what we focus on throughout our organization. And we're still focused through this environment of growing our team members individually, meaning growing them professionally and personally, and helping them expand and achieve more, in addition to growing our number of team members driving results. One of the things that I think has been most critical to DLP I read a great book called How the Mighty Fall about 3 years ago. And it's a Jim Collins book, and I'm an enormous Jim Collins fan. And it's a book about how great companies can fail, especially in very difficult times like the times we're in today. And after reading that book, it made me realize I need a way, despite the fact that we've grown every year by 60% plus, and we win all these awards, and we're, in most people's standards, growing really fast and highly successful. I was worried that, were we getting more stronger as we got bigger, or we were facing more risk and more opportunity of failure? Some of you might have heard the saying, or heard this said before, that more companies go into bankruptcy and fail due to growth than lack of growth. And so we wanted a way to measure how effective we were. And we came up with a terminology here. We call it DLP, productivity per person, which we say here at DLP PPP, which, interesting enough, is the same term that's being used for the stimulus program about keeping people employed. It's called the PPP program. And we've set a goal each year. It's been increasing our productivity per person by 25 to 28%. And PPP, how we calculate this is we take our net revenue and we divide that net revenue by our number of team members or employees, and we calculate that on a trailing 12-month basis. And every month we recalculate that number with a goal of growing by 25, 28% each year. This year the goal is basically 25%. It's going from about $160,000 to $200,000 in net revenue per person. And in 2018 we grew by about 21%. In 2019 we grew by about 22%, and this year we're set on growing 25%. I think we're going to end up getting there actually much earlier in the year than the end of the year. And that's been a great way. And while we did that, we added 72 net new team members last year while becoming 20% more productive per person and adding 70 plus people. This has been a great way for us to measure how productive we are. And when all this broke out here in coronavirus and everything came in, this became the first place I started focusing on. And we as an executive team started focusing, all right, we need to drive productivity per person. We need to get to our annual goal of $200,000 even sooner, because we need to get even stronger to weather the challenges and volatility we're facing. And so far this year, just through February, we're up, I believe it's a hair under 4%, waiting on the March numbers. Yeah, it should have any day. And we'll should be 6 or 7% up just through the first quarter of this year. And a big part of why we continue to get more productive per person is because we're constantly focusing on helping each person grow and become more productive individually. I literally led an hour training this morning on level 3 leadership, which is production. How about how individuals can become more productive and a more productive leader. We focus on helping team members become more productive and effective and fulfilled in all aspects of their life. It's one of our core values we call living fully. We do a lot of unique things, including we have a group called Driven for Greatness, which we meet every other week, and we focus on learning, and we read a different book together each month. A different team member steps up and leads us through that discussion on that book every other week. We meet with fellow like-minded driven people on our off weeks. We focus all around just personal development and growth, and we do things like getting together, and Rich here on the screen leads a 5 a.m. workout group every day. People get up early and work out together through Zoom and get each other energized. And then Patrick leads one at 7 o'clock. And I use a lot of things to help people grow, and especially in this time of people being somewhat isolated and so forth, helping people live a full life and be fulfilled each and every day. And it's been a big part of why we continue to get more productive despite all the challenges. So some cool things in relation to that. We were just named on the Financial Times fastest growing company list in the Americas. So this is actually technically our first international award. And we're the 142nd fastest growing company in the Americas. And you'll see here, if you can read this little overview here from their website, we were 142nd. We had a 473.8% growth over the past 3 years. That's a compounded annual growth rate of 79%. And if you look, there are 2 spots beneath us is Uber. So we grew faster than Uber, Tesla, and Netflix. So that's some pretty cool company. Pretty cool. Pretty proud of that. We just won Prada Homes best home plan for one of our bright home floor models here called the Ethan, which you can see here, the outside and the interior look of that house. One of our 4 main home plans that we build. We also were the 8th fastest growing real estate brokerage in America by Real Trends, list that analyzes all real estate brokerage data. We're the 6th fastest growing independent brokerage that isn't a large brokerage with many offices. So that was pretty cool as well. And we've stayed very focused here through this challenging time in the last 5-6 weeks here on one of our core values of stewardship, maximizing all of our resources that are entrusted to us. Those resources certainly, you could say first and foremost are your capital, our investors' capital, in addition to our resources of our time, of every dollar, we spend from our operating company standpoint, every dollar of revenue owed to us, maximizing resources. And that's one of the big reasons I look at why we've done such a great job on rent collection, is because we've stressed the importance of that level of stewardship, that job we have of collecting that rent, and how important that is for us to be able to deliver our returns, to you as our investors. And our teams have stepped up and and understood this responsibility, this core value, and frankly have done an excellent job. And then we've continued to stay focused as well. And I think there's going to be more opportunities than there's been in a long time to create make an impact on some of the epidemics the country faces. And these epidemics are, frankly, growing each day. And that's the center of our foundation. The DLP Positive Returns Foundation is centered around, two really big epidemics in America: the housing epidemic, the lack of affordable housing here in America, and the job epidemic. And, that we had a job epidemic prior to coronavirus, right? And now we're facing, an even more tremendous challenge there. And that challenge, that job epidemic, is only going to be solved through entrepreneurship. And it's a big part of what we focus on in addition to directly impacting, the housing epidemic. A couple weeks ago, we had red buses at March 16th, actually, I guess a month ago now, time's flying. We had red buses out at all of our offices donating blood, which, if you haven't paid attention, a lot of places need blood donations now more than ever in light of what's going on. So we're out in our communities, out focusing and delivering value to our residents and the places we work and live. So a couple quick government updates, and then I'm going to open up to questions. So again, we gave this update last week. Florida remains, most of the country has kept construction, real estate sales essential. Property management is essential in every state. We're still dealing with Pennsylvania. There's a bill out right now. We're hearing Governor Wolf, unfortunately, is going to veto it, but to allow more industries, including home construction and real estate sales, to reopen. It was passed by the House early Tuesday, but we're hearing it's going to be vetoed, unfortunately, but hopeful that we can get that through sooner rather than later. Again, here's an updated map. I don't think a whole lot has changed here in terms of which states in green construction is considered essential, which, construction one way or another is kind of the lifeblood of much of the economy, but certainly the lifeblood of real estate and our lending and much of what we do. And I see most places have made it essential. So stat here is that across the National Multifamily Housing Council shows that most Americans are paying the rent. 89% of apartment households have made a full or at least partial rent payment as of April 15th. So it doesn't mean the average owner has collected 89% of rent. Some of that is partial payments, but still 89% of renters have made at least some payment by April 15th. Again, that was before most received any stimulus checks. So hopefully a lot of this federal aid, is continue to make an impact until we can get the country back reopened. The Paycheck Protection Program, or PPP, had more than 1,562,000 loan approvals, totaling over $329 million. That was only through, a little over a week of this program being live. So all the money is now gone. They're not taking in. Most people who are already in process now are waiting for the government to figure out their funding situation, including DLP. So hopeful as we are for ourselves and for many of our borrowers that they refund this program. It is a pretty amazing stimulus program. So I'm glad, though, they're getting that money out to a lot of small businesses in need. This week's tax day, of course, came and went, and now the due date is July 15th. So that's a great relief for many. Americans have started receiving their stimulus checks. Many of our DLP team members have told us that they've received their checks yesterday and the day before. So that's pretty awesome. Let's see. So that's the key points here. So with that said, I'm going to hit the last two things before I open it up. So first, hopefully you've all received this email. If you haven't, you'll receive it. And then you can also go to dlpcapitalpartners.com and register here as well. We'll put that in the chat box too. But April 30th, that's 2 weeks from today. So 2 weeks from today, we will not have this meeting at 4:00. Instead, we will have a virtual dinner party. I promise that none of you have ever been to a virtual dinner party before at 6:00. Please, we already have hundreds of people RSVP'd. We only opened this up 2 days ago, and we have hundreds of RSVPs already. But we need you to submit here within the next few days, I believe by the 23rd, in order for us to send you out a pretty cool gift that you'll be able to enjoy to make it feel like a dinner party when you're sitting at home tuning in. So please RSVP right away because we have a deadline to be able to get those gifts out. So please do that. Again, it should be in your email. But again, you can go right to our website and put that in the chat box here as well. And you can go and register right now as we're chatting. And then next week at this exact time, so same, you don't have to do anything. It'll be the same login we're in right now at the same time. Instead of covering, kind of coronavirus effects and the kind of format we've been covering, instead we're going to do something pretty unique. So every quarter for many years now, I do at our normal dinner events, not the virtual dinner events, but our normal face-to-face dinner events, I do a happy hour segment where we give our existing investors only. We don't allow prospective investors in the room. It's only for existing investors. And we share kind of the internal updates to what's happening at DLP, share all of our fund performance, share our outlook for the next quarter, kind of get into the details of our actual performance. So we decided, in light of not being able to do this face-to-face in the virtual environment, that we're going to do this next week in replacement for this normal discussion. And we're going to allow everybody to join, everybody to see our exact performance of our funds in Q1, see how we perform, see what we're projecting here for Q2, and be a part of our normal kind of happy hour presentation. So you can jump in, same place, same location that we're in right here, and hear all about how we actually performed in Q1, including how we performed in March through coronavirus, which we're pretty excited and proud of. So hopefully you'll be tuning in for that. And then you can reach out to myself, Rich, Larry, Bob, and Mike for one-on-ones to talk more about your specific situation or any questions we don't get to or you don't feel like you're the appropriate place to get the answer here through this session. So we'd love the opportunity to do that with you. So with that said, we're going to open up to questions. There have been lots of them coming in as we've been chatting. So I think Larry is going to go ahead and start asking the questions.
Absolutely. Thank you. And just as a reminder, you can, when you register for our webinars, submit your questions beforehand so that we could actually prepare slides as you saw at the beginning of the presentation. So we'd love to hear your input and make sure we're answering all of your questions. So with that said, let's go ahead and get started. Our first question, Don, is how do major corrections, such as the one caused by the virus, that cause drops in the market affect investors and DLP's ability to drive returns?
Yeah, it's a great question. So, every recessionary event, every major correction, they're all a little different. And this one's certainly, been very different than previous ones in some significant ways. Some ways they're the same in the fact of the lack of consumer confidence and financial markets tightening up and the fear and the panic and how that affects decisioning. Those kind of things are always happen and are frankly very much predictable. But the exact effects on each industry and on real estate, it's so different. Like in this case right now, the fundamentals are so strong in terms of housing. There's a lack of housing, a lack of affordable housing. Fundamentally, the occupancies are great throughout most markets. The home sale market, there's been an undersupply of homes, just like there's been for apartments again and again. We're at record-breaking low inventories of homes available again here right now. Outside of coronavirus, of course, we were in a strong employment market. But so much of the housing market, the lack of supply and strong demand, I really believe is gonna buoy both the rental market. I don't expect to see much of any pressure on rents. I don't expect, if you manage well, to have much pressure on occupancy either. Certainly, if there's a lot of unemployment, you're gonna have more pressure on delinquency. And I don't think we're going to see a major decline overall in terms of home prices once we get people get back to work and can show homes and so forth, because the supply is so low. So that's very different than last cycle when there was way more supply than demand. Way I think about major corrections is in every line of business. Even if you look at the world of hospitality or retail, which are restaurants, which is a terrible place to be right here, right now at this very day. The best operators, the best businesses are going to thrive from this, and they're going to be an environment where other restaurants that they competed for patrons are going to go out of business, and they're going to get a disproportionate amount of the people who do go back to restaurants when things reopen. And yeah, they may have some short-term challenge, and they may have to borrow money, and they may have to do some things they didn't want to do, and they may have some financial hardships on the short term, but long term can really benefit. So I try to think about things in terms of how I think about making investments and how I evaluate the market by looking at things from a short-term standpoint. What are the effects on my world and my investments here today, tomorrow, right now? How do things look, midterm and then, long term? And I really focus heavily on the long term and midterm, more so than, what's the effect today, tomorrow, and, really feel strong about where we sit in affordable housing in general, that's a sector, both as a lender and as a operator, with where we stand today in the market. But there's going to be, some challenges, people who are going to be tight for cash and have a hard time getting financing, and, financial markets are going to cause some challenges for many.
Awesome, thank you. And along those lines, Michael had a question that he made a great point. Even once things start to reopen, it's obviously not going to be exactly the same as before. Unemployment will likely stay high for at least the foreseeable future. So, what are some additional steps DLP is taking, in addition to the ones you've already mentioned, in order to get ahead of that, both on the lending side and in our communities?
Yeah, so it's a great question. So, I definitely agree. I mean, I think that's been an interesting thing to see how human psychology and how behaviors and, change, let alone the economic effects of, people being unemployed, but the fact that people have gotten used to social distancing, and people gotten used to doing more of their shopping, from home, and how does that change, behaviors and buying tendencies and so forth. So I think it's going to be interesting. I think, a lot of segments of real estate are going to have some long-term effects because of that. I think a lot of companies are going to realize, hey, I don't need all this office space. I actually like having people work from home and can be more effective and cut down costs. I think we're going to see a decline in amount of office space needed. And I think a lot of retail businesses, and there's going to be some that'll do really well, but a lot that are really going to struggle as people have gotten more adapt to buying, online. And so I think there's a lot of effects, and there'll be, winners and losers overall in terms of segments and based on how behaviors change. What I think in terms of our main kind of world of housing, of long-term rental housing, there's going to still be a tremendous need for people to have a place to live, and that really isn't going to change. What will change is if there's a lot of unemployment, and what I think enough people think about when there's unemployment is that the secondary effect of unemployment is that a lot of people end up having to take a job when they get laid off that pays less than what they used to make, until they can get back into either work their way up in that company or find the right opportunity again. So a lot of people are going to see earnings cut over the next year or two, and so forth. So what that means is that people are going to need a more affordable place to live. They still need to live somewhere, right? So that actually in many ways benefits our world of where our average rents are $812 a month. So there's going to be some markets where the $1,500, $1,800 a month rents, there's going to be a struggle with occupancy because there's not going to be as many people who can afford them. But we're going to get a disproportion of this number of people who are going to come to our $800 or $900 or $1,000 or $700 a month apartments that are more affordable. If they went from 2 incomes down to 1, they can still afford it, right? So that's going to help us quite a bit, and that's why I feel very confident we're going to be able to hold our rents, and we're going to be able to hold our occupancies, and we're going to do as we put new residents in our properties, we're going to be doing even tighter screening of those residents, and I think we'll be in a really good position. Not to mention a lot of operators we compete against for those residents are going to be struggling, and they're going to be laying off their own staff, and they're not going to be able to do as good of a job of managing and leasing and so forth and getting their units ready, which is going to, if you're doing a great job of management, it's going to put you in a better position. If you can keep your apartments ready and keep your property maintained and so forth, which we will, it's going to put an advantage for us. On the lending side of our business, we lend to investors buying distressed real estate. Well, I think the premise of that question is the expectation that there's going to be distress, right? So that's a good thing for our investors. that creates more opportunities for them to buy properties at lower prices. I think overall there'll be less, homes flipped in the next 12 months as there was in the last 12 months. But the ones that are flipped are going to be are going to be bought at better prices. They're going to be bought by the stronger, more liquid borrowers. And at most, there's going to be 20 to 25% as many competitors in terms of lenders for those borrowers as there were in the past year. So there's going to be a lot less competition to work with the best borrowers. So even if there's less deals done, we'll be able to do more deals here at DLP to better borrowers at lower leverage, buying properties at better prices. So, we feel really great about how our business will adjust to the challenges ahead.
Excellent. Thank you. So switching gears slightly here, another question we have here is, how do you, as the CEO of our companies, personally manage your day-to-day in this new environment in order to drive results and ensure the consistent returns that our investors have become accustomed to?
Yeah, thank you. So you might have heard about 2 minutes ago, my door opened here in the room, and it was my 7-year-old opened the door, seeing if I was done with this webinar. So like all of us, but especially those of us with kids at home, dealing with those types of adjustments, which, frankly, I fully embraced, and it's been awesome. I mean, I'm working, as hard certainly as ever, dealing with the new challenges and complexities and staying in front of what we're doing right now, right? Of communicating with our team members, communicating with our investors, communicating with our residents. It's created a lot of change and a lot of hard work and a lot of focus and a lot of adjustments, a lot of digging in and having to deal with things that, we might not have had to ever deal with or not had to deal with in years. So it's definitely been, some challenges there. And I'm very focused on bringing a high level of focus and intensity and energy and excitement to every interaction internally and externally, building confidence with our team members, with our investors, hence this meeting and so forth, and making sure we're out in front of sharing communication and, solving issues and thinking creative and thinking innovative to prepare for what if this happens, what if that happens, how do we prepare for it, how do we handle it, and all the kind of challenges that come from these types of environments. But, for me, I've embraced this time. I mean, I've got to focus on things from a work standpoint and dive deeper into things that with a heavy travel schedule and so forth, hadn't been able to put as much time into. So been able to do more of some things than I had been in a while, and been able to dive into the weeds of some of the operations of different areas and drive even better efficiency, even better execution, because we're forced to right now and dealing with some of the challenges. And then, from a personal standpoint, some of the things I've done, I'm fortunate here to live in a beautiful place, and it's been great weather, and spend a lot of time out in nature, a lot of times biking and running and walking and such, and with my kids, and taking 5 minutes here, 15 minutes there, throughout the workday to be able to spend a few minutes with the kids and get their craziness and energy sometimes I think if you think back, especially those with kids in the house, and those are times we'll never forget, and we'll look back and create some pretty cool memories. So I'm trying to embrace it with that kind of positivity on all the positives that come from this and all the positive that's going to come from this in terms of our opportunities for growth and bringing in new talent and bringing in new investors and taking market share. They're going to come from the changes ahead. So it's an exciting time. It's a challenging time, but it's an exciting time.
Awesome. All right, we have just a couple more here. The next question is, could you give a brief update on Good as New Ventures and that investment entity and the kinds of activities we're doing in that space?
Sure. Yeah. So Good as New Ventures is our largest entity that invests, our largest, I guess, holding entity, I'd say, that invests in real estate. So it's an entity that we do most of our single family investments through. So we still buy mainly in Pennsylvania, 4, 5, 8, 10, 12, 15 houses a month, depending on the month. And we renovate them and flip them. We do those directly, and we do those in some partnerships. And then it also, Good as New Ventures also owns a part of the majority of our larger investments, such as our multifamily communities and so forth as well. So Good as New Ventures is essentially performing and doing as close to the same as it could ever do, continuing to operate as it has, that entity we've had for maybe 6 years, 7 years. And so it's continuing to perform, very similar as it always has, and continuing to acquire properties and continuing to generate rental income as well as profits from the sale of homes.
Excellent, thank you. One more question, more about the markets. As far as our outlook, do you foresee more of a buyer's market coming up in the next coming months?
So in terms of the home, the home market, the residential home market, which is probably where the question is coming from, it's going to be interesting. I think in a lot of ways, it's going to be as close to an equal market between a buyer and a seller market as we've been in. But I've been pleasantly surprised with how incredibly active the market has been. How many buyers are still anxious to buy despite the government shutdowns, despite all the craziness. So I really think when real estate agents are able to fully operate and can show homes, and people are able to go out and be out in public and aren't afraid to do so, I really think, and if we come out of this coronavirus things opening up here in the month of May, I mean, May is generally the best and busiest month in general for home sales. I mean, that's the spring market, especially in, the Northeast and colder places when it's getting warm. People want to get out there and they want to move over the summertime in between school. So the kids, can get enrolled in the school over the summer. And so it's such an amazing time, that spring market, and with everybody being pent up inside and waiting, not to mention many people getting, $2,400, $3,400 stimulus checks that they, weren't expecting. Which can work out to be a decent amount of a down payment. I really think there's going to be a heck of a incredible home buying market, especially in the affordable range of, $150,000 to $400,000 homes in most markets. I think it's going to be a very strong market. I think we're going to see multiple offers on a lot of homes, and it will be interesting to see how quickly sellers get their homes onto the market, because we had record low inventories of homes on the market for a number of years now. And right now, to put in perspective, there's about half as many homes as the record-breaking low number of homes on the market. So it'll be interesting to see how quickly and how many sellers get their homes to market, and how much supply is available will dictate, just how competitive it is for each home. But I think if you look at the midterm, look at beyond the next 3 months, I don't think in most markets we see any decline in prices and home prices in that affordable, sub $500,000 price range. And I think we'll see pretty great growth in home prices over the next few years. In terms of the investment market, such as multifamily, I think pricing is going to come down a good 10 to 20% on average for the next 3 to 6 months, until lenders get back in the space and people kind of settle in, and people see that, renters are making their payments and things kind of settle in. So I think there's going to be some amazing opportunities of some price readjustments in the multifamily and certainly other asset classes such as hospitality or office. There could be some pretty steep discounts due to some of the fundamental challenges there.
Excellent, thank you. So we have one more question. It's a bit of a twofer, but seems to go well together. It's from Anthony. So through this change and through the disruption in the markets, have you seen an influx in any one of our funds regarding new investment? And in those regards, are we able to then take accounts such as 401ks, IRAs into any of the funds, and how would we go about doing that?
Yeah, thank you, Anthony. So in short, yes, the lending fund has had the largest amount of new capital coming into the fund. And yes, we do take IRA, 401k, qualified investments in all of our funds. And third point I make is, the DLP housing fund, which some of you still might not be that familiar with, because we literally launched it, the week of coronavirus started. We launched it early to mid March is when we officially started taking in new investors into the fund. So you could argue that was a tough time to launch a new $1 billion flagship fund. And we have, brought in many new investors into that fund over the last number of weeks. But I don't think yet, until we've been able to fully promote it, and we've kind of moved all of our communication to be focused here on giving updates and so forth. So at the April 30th dinner, that'll be the main fund we talk about. And it's the fund that if I was going to design a fund to be prepared to capitalize on the opportunities that come from coronavirus, I could have never designed it better. Because it's the first fund that we've ever done that's designed to invest equity in real estate, own real estate, and make loans. So like, as I sit here right now in Q2, this is a great time to make loans. Short-term loans, there's a huge volume for it. We make low risk, great investments, generating great cash flow that also are going to pay off really soon. And it's going to give us back liquidity to then be focused here in the second half of the year when we're going to be focused on heavily on buying. So the flexibility of the fund to focus more on lending or equity based on where the opportunity is, based on what's going on, and how, especially as things develop here through the recovery of the market, it's going to be very, very well positioned to generate great monthly option of great monthly cash flow, great double-digit returns, liquidity, tax shelters, all in one. So that's where our biggest focus is going to be moving forward. Here as we grow this year.
Excellent. So I believe that's all we have here for today. Thank you for answering those questions. And again, just as a reminder, please do submit your questions to us. Get in contact with us with anything you'd like us to address. And Don, I'll turn it back over to you to wrap up.
Awesome. Thank you, everybody. Appreciate all that time here again, sticking with us here. I'm looking forward to hopefully you are some different formats here. We'll certainly be available, as Larry said, though, answer questions throughout the week as well. So even if we don't have this exact format for the next week or two, we are going to do Q&A though each week. We can gladly connect with you one-on-one as well. And I look forward to chatting with everybody and sharing our performance next week. Thanks, everybody.